All right. Grateful to be here with everyone today. Thank you for taking time out of your day to go through the deal process from underwriting to closing for apartment syndication deals. Very important topic to really streamline your process and procedure as well as your team function. If you haven't bought a deal before, this may be a slower and a little bit more time consuming process to go from underwriting to closing a deal, but all of these steps are very important. So it's an opportunity to you to learn, to prepare for your first time when you're going to be do it, or it will be an opportunity to streamline and become more efficient at the process to review a higher volume of deals, and eventually get to closing more deals with your team's efficiency in place. As we all know, it's a very competitive marketplace. And so, not every deal that you go after you may get. And so, getting through this process from underwriting to close is very important because you're going to do this more frequently, and more often. So having a good streamlined process is important. The recording, Erickson, this webinar recording will be shared. The MFIN Summit recordings will also be shared. If you purchase your ticket, you'll have access to the recordings after the summit concludes. So I'll go ahead and dismiss that. One caveat, as you all know, use the Q&A box, use the chat box. I will do my best to keep up and monitor both of those while we are going through today's webinar. It is all for you guys and gals out there. So without further ado, let's get to the content for today's session. And I'm going to do my best to keep up with the chat box and the Q&A box to make sure we get through everything. So first item in here is really qualifying the deal. So a couple of important things when qualifying the deal: have a strict market criteria. So what cities or specific submarkets within a city are you going to be buying in? It is not acceptable to have a blanket statement of, buying in the Southeast US. There's way too many markets, way too many metros for any one group to know effectively, unless you have a team of 10 to 50 people that just study 5 to 10 metros per person. You need to have strict criteria. So make sure the deal qualifies in the few select metros that you want to buy in. What is the price range that your group is able to purchase and acquire? Can you take down a $10 million purchase, knowing that you probably need somewhere between 3.5 to $4 million at a minimum to acquire the deal? Plus, you'll need additional funds beyond that, potentially, if you're doing a value add deal. So know the comfort level of the maximum purchase price. So if a $100 million deal is presented to you, if you can't purchase it, you shouldn't spend time looking at it. So qualify the deal, make sure it's in the right metro, make sure it's in the right price range, and make sure it's the right type of asset for your specific syndication goals. So are you only looking for value add deals where you can increase the rents by doing renovations, which would in turn require you to yield a little bit higher ROI or IRR on the overall metrics for investors? Or are you able to have maybe a more conservative deal that's less value add but higher cash flow, where the cash on cash is better, but the overall IRR might be a couple of points less compared to a significant value add deal? So knowing the metro, knowing the price point that you can afford to buy at, and of course, making sure that it fits your business plan. All really quick things to qualify the deal. And then once the deal is a yes, yes, yes to all those pieces, you move on to the second bucket of running the numbers. And so you're analyzing the projected income and the projected expenses, as well as looking at the trailing 12 income, trailing 12 expenses to see how the numbers fit into your underwriting model. I'm not going to get into the underwriting specifics. We've got plenty of high quality videos that really go through all the details of underwriting and running the numbers on things. So, really, once you qualify the deal, make sure it fits your metro, your price point, and your business plan. Then you do a quick run of the numbers to say, okay, at a high level, if there's 100 units, market rent is $1,000. Our expenses are going to be maybe 40% of gross income collected. Then these numbers seem to pencil out. You go on to the next step of touring the asset and meeting with the broker. Again, it's all about doing things in a time sensitive order. And so if the deal doesn't qualify for our group, we don't spend any time analyzing the numbers. If it's the greatest deal in the world, but it's not in our metros that we are targeting, then we're going to pass on that deal and just kind of be laser focused on where we want to buy assets so we can find good deals in those markets. Touring the asset is really a great opportunity to meet the broker, build rapport with them, develop that relationship. And it's an opportunity more so for you as a buyer to prove yourself to the broker that you are a legitimate buyer, that you can close, you do what you say, you have the funds to close the deal. And you also will tour the asset and verify that what you've seen in photos, what you've learned from the broker's OM or marketing material, that everything checks out. There's no, significant deferred maintenance. If your syndication group doesn't have a person like a Brandon Abbott that we have, who has the background of, construction knowledge and building codes and everything like that, you don't need to specifically dive too deep into significant deferred maintenance or maybe foundational issues when you're touring the asset, because you're going to have a professional inspector do that. The lender's also going to have their property condition assessment report done, a PCA. And so again, touring the asset is that opportunity to prove yourself as a high valued legitimate buyer to the broker for you to close the deal. And also, verify that there's 100 units on the property, verify that the roofs are in good shape, verify that there's no, visually seen deferred maintenance, ask questions of the seller, of the management team, really those basic items there. Let me pause. I saw a couple of boxes pop up, Q&A box. Rules of thumb that you can apply in any market regards to expenses that may not be accurate. Erickson, good question on rules of thumb around expenses. We go into all of those details in the underwriting part 1 and part 2. And then I believe we have a part 3 video out there. We will share the link to those videos in just at the end of this webinar. We'll make sure that they are out there. Melissa, if you can make a note to share the underwriting video links, that would be very helpful. Are you sharing slides? Vijay, no, we are not sharing slides. We are just going over the screen here that's shared on qualifying the deal, running the numbers. A great thing to do is just, pencil, paper, pen and paper, jot down the notes as we're going through this. And of course, we'll share the recording of this so you can watch it again and go back to anything that you missed. So now that you've qualified the deal, Jamie, go ahead and ask a question. I see you raised your hand. If you have a chat box or a Q&A box, go ahead and do that. Carlos, I'm going to get to your question at the end, and I'm going to keep moving here. Jamie, I did see you raised your hand. If you have a question, feel free to put it into the chat box or the Q&A box, and I will come back to it. But so now that you've qualified the deal from a high level, the numbers work. You've toured the asset, you've met with the broker, you've established rapport, you've established that you're a credible buyer, that you have the funds to do that. The next piece is to go into a full underwriting. So this is where you go into the details of every expense line item, all of the income line items. You have your property management company work with you to do a rent comp analysis to make sure that you are inputting accurate projected rents for your underwriting model. Again, the 2 videos where we go into the very in-depth detail of how to do underwriting is going to be very helpful here. But once the deal qualifies, it meets your return metrics for investors. That's where you go ahead and you start to offer on the property. And so, offering on the property is just backing into what returns you're trying to achieve for investors and adjusting the purchase price according to what your goals are. Again, when you meet with the broker, it's going to be an opportunity for you to ask for, and this is an important term, pricing guidance. So brokers in the industry, to be a professional and kind of to speak like the brokers do, you're going to want to say, hey, Mr. Broker or Mrs. Broker, what's the pricing guidance on this deal? And they're going to tell you, oh, it's 50,000 per door, or maybe it's 250,000 per door, or hey, this one is probably going to trade north of $48 million. Well, that's where you're going to take that number and kind of judge it in your underwriting model. And if you're able to meet the purchase price or the pricing guidance that the broker's giving you, your returns are great in your underwriting model, then you can feel confident offering at a good price in order to meet your business plan. If the pricing guidance is 48 million, but in your underwriting model, you can only pay 45 million in order to hit the metrics that you want for your investors and your ROI and IRR, then you may only be able to offer that 45 million. That's how the offer process works. It's all about what numbers work for you and for your team. And that's where you submit at. But of course, ask the broker for guidance. So sometimes we'll look at deals and the broker will say, hey, this one's probably going to trade north of $60 million. And if our underwriting is only getting to 50 million, we may just tell the broker, hey, thank you. We're not going to be competitive on this deal. So let's not waste your time. Let's not waste our time. We're just going to move on. We're not going to offer on it. Thank you for the time. And we'll go from there. And so that's another piece to it. Not every deal that you look at, you don't have to offer on everything. You certainly can, but sometimes if there's a significant difference in the broker's guidance and what your maximum purchase price could be, it may not make sense to spend the time to go through that and offer and think you're going to get a deal that just isn't going to work. So keep that in mind as well. And the other caveat to it, if you're someone who's saying, well, hey, Danny, there's no deals that have penciled out in my underwriting, no deal is a good one because I'm not hitting the returns I need, then I would highly encourage you to watch the underwriting videos to see in what areas you may be over conservative and what areas you may need to adjust and learn more about. So if you're, for example, overstating what your insurance is because some friend told you insurance is $500 per door for multifamily. Well, I would encourage you to get a real quote on what the insurance would be for the property you're looking at, because that price could be $150 a door. And that may make the difference between a good deal hitting and achieving your return metrics and a deal that doesn't. And so, you know, once you qualify the deal, it meets your numbers, you've met the broker, you are having a good competitive offer, you're going to submit that offer. And typically, on deals that are greater than $5 million, I'll say, the brokers are going to have an initial offer process. There's going to be potentially a second round of offers. There's potentially going to be a buyer interview call after the second round of offers, and then there'll be what's called the best and final round. And so it's a way for the buyers who got interviewed to potentially differentiate themselves and potentially offer a little bit more, hard money, a faster close, maybe a little bit more in the purchase price to win the deal. And so that process can be a little bit stressful or frustrating, but again, you just need to remember that, if you're looking at 100 deals offering on 10, you might buy one. So I'll go back to what I said previously. You're not going to win every deal that you offer on. So don't get upset with the process. It's something that everyone has to do, regardless of what size deal you're buying when we're talking about larger multifamily deals. And going through that process, hopefully you can go through the process, you get awarded the deal, and then it is time to review and draft the PSA. And then you'll work with your attorney, you'll work with the seller to negotiate terms of that purchase and sale agreement. And then as soon as the purchase and sale agreement is signed by both parties, you're going to start your due diligence process. And I'm not going to get into the ins and outs of due diligence. We can always do another webinar specifically on property due diligence if we have not already done one. And so that's really the process to go from qualifying the deal to getting it under contract to getting it closed. And I'm going to kind of wrap things up here and jump to the chat box and the Q&A box to make sure that we answer all of the questions that you have. So the first question here, Tony, what's the underwriting software that you use? We use our own Excel spreadsheet, and we go through that in the couple of webinars that I mentioned before. So make sure you watch those if you have questions on the underwriting piece. These are the same steps that I would use if I was buying, a deal by myself, if it was not a syndication deal. So Ken, yes, if you're just a one-person business and you're buying deals on your own, I would use this same process because it's all about streamlining it, right? I don't want to spend time running the numbers if the deal doesn't even qualify for my criteria. So whether you're doing it on your own or a syndication model, I would follow this same process here. Okay, we have the videos shared in the chat box for anyone interested in checking them out. Thank you so much, Melissa, for sharing all of those links. So we have video 1, video 2, and then 2 additional underwriting videos. So 4 of them out there, all very helpful in understanding the ins and outs of underwriting specifically for multifamily properties. Carlos, so your question here, what details should go in our business plan, especially when we're trying to attract high net worth individuals? The way to attract high net worth individuals is to really talk to a lot of people and build the reputation as if you're a multifamily investor, that you're the go-to multifamily investor who has really good opportunities for people to invest in. And so the piece that I want to highlight, not every investor or person is going to be right for your deal or your business plan. And so the most important piece is when you're talking to these individuals, you want to have a conversation about what their goals are. And so, for example, if you get on the phone with someone who is later in life, maybe post retirement, or excuse me, they have retired, they are just enjoying the retired life, they may not want to be invested in a value add opportunity that has a longer um, investment horizon, and their investment philosophy later in life may be a higher cash on cash return to supplement their cost of living. And so, I wouldn't speak to that person and say, hey, we've got a great value add opportunity. Cash flow is going to be really, really light in the first few years, but then there's a big equity multiple on the back end. And so, it's not about attracting individuals to your business plan. It's about talking to people and figuring out what their goals are. And if they align with what your group is doing, then it might be a good fit. But we talk to people all the time and say, hey, look, your goals are a little bit different than what our group is doing. So it doesn't seem like a good fit for you to work with us or us to work with you. But here's a couple other things to go and look at. It's not a good fit at this time, but that may change. So have conversations, learn their goals, and then if their goals align with your business plan, then it's going to be a good fit. For syndication, when do you go into capital raising? After an LOI is accepted or once the PSA is signed? Ken, good question here. Capital raising is one of those pieces that you always need to be doing. And, that's really having conversations with individuals, getting them on your investor list. So when you have a deal, you can go out to your group and start to raise funds. Our group typically will get a deal under contract, and then we will email our investor database to announce that the deal is open. Here's all of the deal information. And if you want to invest in the deal, sign up now. And that is our process. So physically, money getting deposited into the bank account, we do that only after we have a deal under contract. Every group is different. I would not suggest getting funds in before. I think there's more SEC regulations. I'm not an attorney. I'm not an SEC advisor. So check with the right folks before making a decision. But for our group, we don't want to take investor capital and have it sitting in a bank account waiting to get a deal. So we only get funds after a PSA is signed. But we're constantly having conversations with investors to make sure their goals are aligned, that they want to be invested in multifamily, and we add them to our list. Once we have a deal under contract, we'll email that opportunity out to everyone. How would step 2 change as far as running the numbers? Right, Tarek, running the numbers. If my team found it direct to the seller. Well, same piece that you would do. You obviously would want to go and tour the asset with someone, either the seller or the property manager, and build that rapport. So you could substitute me saying broker with owner or property manager. I would want to meet the decision maker at the property if there was no broker involved, if it was a direct seller to buyer transaction. But everything else in the process should run the same. You'll do your full underwriting, you'll make an offer directly to the seller and negotiate directly with them. So nothing should change, just substitute either, broker for owner, or, person handling things for them. What is the process of raising money? How do you know an investor is actually going to pull through, will send the money, and so on? Puneet, we have extensive webinars on this topic of actually raising money. Dan in our group is the one who handles and is really in charge of that process. We've done a lot about, attracting high net worth individuals. So I would encourage you to watch the webinars we've done previously on that topic. We're going to have some great money raising topics at the upcoming MFIN summit. So that would be a great place to go and buy a ticket and attend to learn some of those pieces. And it'll be more than just, our group's opinion. We'll have other professionals talking about raising money, but the basic process, very quickly, is just to have conversations with people, make sure their goals align with what you are doing. You build rapport, you build trust, and building that trust will ideally have them come through and actually fund the deal. You're definitely going to have some people who will not come through. And so you need to be prepared for that with backup investors and so on and so forth. Back office apps or recommendations for keeping investors informed on the deal they're invested in. Yes. MailChimp or any email software, typically once a deal is in process or we've acquired it, we've closed on it, we send out a monthly email to just let people know what's gone on at the property, what occupancy is, where we're at, any resident events, things that are happening on site in a one email per month update. We believe in the philosophy of over communicating. So we want to provide all the information that someone would need, so there's less questions. So having an email service to get that information out, having an investor portal is another back office piece. IMS is one of the portals that we use to track investor funds, how much they've returned to date, things like that. So those would be the two biggest pieces. And just being organized, having good tracking of files and things like that. So what criteria do you have for numbers? All of the criterias for like estimated percentages of income and expenses are in the underwriting videos in the chat box. So watch those 4 videos and you will have everything you need there. Dana, glad I could help. That is it. I'm going to jump to the chat box now and go through that. Oh, thank you, Melissa. You've been keeping up with everything here. Active audio suddenly stopped working, not hearing. Ken, can you hear me? Oh, good. Audio's working fine. Maybe you had us muted or your volume shut down. Maggie, at what point do you have your property manager give you a pro forma? Once we run the numbers in the initial stage and it qualifies at a high level, we are going to have that property manager go and tour the asset with us. And at that point, I would ask them to develop a pro forma that we can compare to our numbers, and have them, have the property manager deliver it to us prior to finalizing that full underwriting. So, at some point, once the deal qualifies and we run the numbers really quickly, we'll notify the property manager and say, hey, this is one we're really going to go after. Can you get us a pro forma, please? And can you tour it with us, next week? Or are you able to go out on your own and mystery shop it and see what you think of the asset? And we'll build that in and use that pro forma information to validate and finalize our final underwriting before we offer on the property from the very initial offer process. It's been great. It's been, I feel like 40 full minutes of a lot of good information out there. I'm going to kind of wrap things up. This is, again, we do these webinars every week for y'all to benefit from and grow your business. I will ask if there are any final questions. If there are any final questions, go ahead and ask them. Otherwise, we are going to wrap up here in a minute. Maggie, another question here. Are you using the broker's market rents and expenses in your initial quick analysis? We will use the broker's rents and expenses, but because we are focused on such a select few markets, we know what the rent comps are and what the expense comps are when we analyze a deal. And so, we keep kind of behind the scenes a little cheat sheet of specific metros and what the rent range should be, what the expense range should be. Because, for example, I know that salaries are a little bit more expensive for payroll for on-site staff in Raleigh, North Carolina, compared to Charlotte, North Carolina, or compared to Greenville, South Carolina. And so having that knowledge helps us run things a lot faster, and you all will get there as you look at more deals, underwrite more deals, and get to know the market rents and expenses. And so the broker's numbers are good to use. They're nice to have. And we will sometimes use them, but if they seem egregiously wrong, and it's pretty quick to check, market rents in an area on a apartments.com to see if the broker's telling you the rents are 250 more than what they're getting today. Definitely do a quick search on apartments.com, see what a renovated unit looks like and what their rent is. And you can always call a property and say you're looking for a 2-bedroom and what's the price for it, and double check them. I would not feel confident using the broker's numbers for final underwriting. And I would, if you don't have a confidence in the numbers when doing that quick analysis, then do some research, get your own numbers, and either validate that the broker is giving you accurate information, or change the numbers to use what you believe they should be. And always get another opinion if you need it. Ed, you stated it's important to identify markets to focus on. I've read a lot about Houston, Dallas, Atlanta, but too far away from me. Are there any hot up and coming cities in New York State or Ohio that you would recommend exploring? So, Ed, unfortunately, my answer is going to be no. And I don't know because we don't look at New York or Ohio. And so we are laser focused on those markets that we look at. So I know that zero about New York and Ohio. I would say interact with folks in the MFIN group and see who's investing in New York and Ohio, have conversations with them, talk to property managers in those areas. But really, there's good deals to be found in most metros. It's about refining what your business plan is. So are you looking for a cash flowing deal? Do you want a heavy value add deal? you can certainly find them in both of those states. And so I would network with other investors and figure out which areas you want to start looking at, but make sure the area fits what your business plan in and what your actual goal is for the why you are buying the property in the first place. Last question here, finding good brokers. We've done a broker relations webinar just a couple weeks ago with Brandon. He handles all of our broker relations piece. So it's about networking, picking up the phone, meeting for coffee or a virtual coffee. And, if you're a new buyer, you have to prove yourself to a broker that you can actually close deals before they take you seriously. And so, the way to do that is to meet with them, make offers, network with them, provide references to them. But ultimately, it will be a challenge until you buy that first deal. But once you can tell a broker, hey, I own this property down the street, or I just closed on this property. I'm looking to do another deal. Here's the reference of who I bought the last deal from. I'm a serious buyer. I'm a serious buyer. I'm a serious buyer. You just need to do that and keep networking with them. So tactical ways to find good brokers, Google searches, see who's in the local business journal for real estate transactions. They will market themselves, right? The more they do and they put their name out there as being a good broker and closing deals, those are the folks you want to network with, the people closing deals and having deal flow to look at. How much paid research versus free research do you use to evaluate a market? Dana, really hard to say on a 50-50. We pay for CoStar. Again, we take this business very seriously. And so CoStar is a fairly expensive service, but it gives us the most up-to-date information. CoStar has a plane in the air almost every day out of the year doing research on real estate, as well as people driving around in most major metro around the country. And so, we probably pay for more research because we use CoStar, but they are the best in the business, and their information is excellent. But nothing beats physically going to a property, looking at units yourselves to do rent comps, and also calling or speaking with property managers of other properties. So that is by far the hands down best way to get real rent comps, is to go and do it yourself. Talk to people. Don't use the computer, but the computer is a quick way to do it. I would always verify in person too. Do you mostly deal with listing brokers, or do deals usually involve brokers? Alan, typically deals above $5 million will, in the multifamily space, will only have one broker that represents the seller. And that broker will represent both parties on the transaction. The seller will pay a commission to that broker. When we buy our larger deals, there's only one broker involved, the broker who has the listing. And that is typically at smaller deals, kind of mom and pop deals. You may have two, a buyer and a seller broker or agent, but very rare on larger transactions. So with that, thank you all so much for being here. I think we've addressed all of the questions, all of the comments. So again, don't forget, Summit is coming up, phenomenal, 50 plus speakers of information. Go to mfinsummit.com. You can get all of the information there. Thank you, Melissa. The link is in the chat box. I appreciate everyone being on, and have a great and productive start to the new year, and happy new year, everyone. We'll see y'all soon. Next week, the webinar, as long as it's been refreshed, I am pulling it up right now. We are, it's not been refreshed. So we will have a webinar next week, same time, same place. We'll see y'all there. And the next webinar will be coming out very soon. So you can get all the information there. And thank you everyone for being on. I hope this was helpful. Have a great rest of the day. Take care.